If you had 500,000 Rand and you wanted to invest in property, how would you go about it? Would you buy a small apartment for cash and simply collect the rent each month? That's certainly one option, and it may even seem like the best option at the time. After all, why would you want to go into debt and take that risk if you don't need to? Well, in this video, we explore the various finance options to demonstrate the incredible power of leverage on your property investment strategy. Now, of course, not many of us actually have 500,000 Rand lying around. But that's the beauty of property investment. You can own an expensive asset when you actually only have a tiny fraction of the capital. And in fact, property is one of the only investments you can make without requiring any capital at all. And it's this principle, the principle of financial leverage, which is the greatest key to property investment. So let's look at 3 different scenarios to help us understand the power of leverage. For all 3 scenarios, we will use the same assumptions. We are buying a small apartment for 500,000 Rand. We're getting a capital growth rate of 5% per year, and just for the sake of simplicity in demonstrating this, we're going to ignore purchase costs and monthly running costs for now.
Okay, so in scenario 1, we are using no leverage. In other words, we're going to use our full 500,000 Rand to buy the apartment outright. That means zero bond, fully cash. After 1 year, your investment is worth 525,000 Rand, which is obviously the original market value plus your 5% capital growth. This means that you've made 25,000 Rand, and if we put that into percentage terms, your investment return is 5% for the year. So because no financial leverage was used in this case, your investment return of 5% is equal to the capital growth rate on the investment of 5%. But let's take a look at what happens when we introduce some leverage.
For scenario 2, we'll apply for an 80% bond on the property. This means that we only need 100,000 Rand of our own cash to buy the property, since the balance of 400,000 Rand is financed by the bank. After 1 year, with 5% capital growth, our property is still worth the same 525,000 Rand. We've still made the same 25,000 Rand, but this time on a much smaller initial capital outlay of only 100,000 Rand. And if we put this into percentage terms, our investment return is 25%. So because we put down less of our own capital as a deposit, our return went up significantly.
But we're not done yet. In scenario 3, we're going to buy the same 500,000 Rand property, but this time we're going to apply for a 95% bond. In other words, we'll only be putting down a 5% deposit or 25,000 Rand. As before, our property value goes up 5% after a year, and once again we make 25,000 Rand profit. But this time our profit is measured against an even smaller initial capital outlay of only 25,000 Rand. This means that in this scenario we make an incredible 100% return. And this is the incredible power of leverage in action. Using more leverage, in other words, a higher amount of the bank's money and less of your own, results in substantially higher investment returns.
And this is our goal as property investors, to maximize our investment returns by using as little of our own hard-earned capital as possible. This allows us to accelerate the growth of our property portfolio, since we can afford to invest in more properties sooner. For example, we could use the 500,000 Rand to put down a 100,000 Rand deposit on 5 different properties, assuming we qualify for 5 different bonds. And the added benefit is that this approach allows us to diversify our portfolio sooner. If all our capital is tied up into one property investment due to using a low leverage approach, then we're placing all our eggs in one basket. By using leverage, we're able to diversify by buying more than one property, since we're not constrained by having to save huge amounts of capital. And this means that you can reduce your overall portfolio risk by being invested in different locations in multiple different properties.
So, now that you understand the power of leverage, let's get back to the original question. If you had 500,000 Rand, how would you go about investing in property? Well, the answer will differ according to your individual risk tolerance and financial situation. If you're conservative, you may want to go for a low leverage approach and buy 2 or 3 properties. If you're more aggressive, you may want to try buy 10 properties with 100% bonds using the cash only to cover purchase costs. Whatever you choose, using leverage will immediately multiply your expected capital growth return, since you own multiple times the investment capital value as opposed to not using leverage. Some more advanced investors who have more capital to allocate and have been in the property game for many years often use a hybrid approach. They create 2 trusts, one of which contains cash properties and the other contains leverage properties, and this works well to separate risk. But this is a topic for another day. However you decide to structure your investment portfolio, please always use leverage responsibly. Always plan for the worst case scenario, whether that be rising interest rates or a few months without rental income. And in the famous words from the Spider-Man movie, With great leverage comes great responsibility. See you in the next video.